Now, apart from the positive inflow of foreign direct investment in the second quarter, government also announced a positive bond issuance of around 74 billion rand. The issuance was also oversubscribed, which indicates some confidence in the country's economy. But how much of an impact will the persistent labor unrest have on future bond sales? And joining me now to discuss this and more is Joseph Busha of JM Busha Investments. Mr. Busha, many thanks for your time this evening. Let's perhaps talk around the good news around the bond issuance. But some analysts, and dare I say it, have said that the 74 billion rand we have gotten will be used to pay for state-owned entities.
So that is the fear, really, and I think analysts and certain, the credit rating agencies are not quite happy with us bearing state-owned entities. The Minister of Finance, Mr. Mboweni, had also made these suggestions about how to restructure some of the state-owned entities. But unfortunately, in particular for Eskom, we can't escape that. That's the engine of the country. It's good that the foreign investors have come in to rescue us again, and at this time it's not hot money like that would flow into bonds or equity markets. At least, if you're getting a 7-year, 5-year bond issuance, is good for us. But we won't be able to escape the fact that we owe money, and that's not really good for us for the future of our children. And secondly, given the fact that our rand is very volatile, remember we have to pay interest rates in foreign currency, and we'll be selling the rand to be able to get the money to service those debt. But certainly it's good in the short term that we are able to get funding, and investors are looking for higher yields, which we are providing currently.
What about this scenario, Mr. Busha? If we are to take that 74 billion and plow it into sectors that are key to growing the economy, surely paying back wouldn't be a big problem, because we'd start to see some growth and some circulation of money within the economy should we plow into the right sectors.
That's a very good point. Certainly we need to look at what sectors, and in particular exporting sectors, where we can export hugely. I think the government, led by President Ramaphosa, need to take advantage of the relationship with China so that we are able to expect more in the agricultural sector, because that's one sector we could use for exports. We know that we've been relying heavily on the mining, but over the last 20 years or so, the significance of the mining sector in terms of contribution to the GDP has certainly decreased. So manufacturing comes in, and hopefully we can have, in the value chain of agricultural produce.
What about the foreign direct investment that we saw? I mean, how good is this for the economy at large? Because this was mainly companies receiving from their parents overseas. How much of a positive was this in the second quarter bulletin that we saw?
Well, it's fantastic. I think this is obviously confidence building and boosting, and also good for the president, because remember, when he came into office, talked about 100 billion he wanted to bring in, and a couple of local SA companies, confirmed that they will certainly play their part in doing that. So given also the fact that you can get money possibly at a lower, cheaper rate offshore, given the fact that the rates are lower there, so those companies, I think it's good for them to be able to support the local companies to do what they can do. South Africa is still a growth story. I mean, we're still a developing country. You can still pick up good yields compared to what you get in Japan or any other developed market. So certainly I think that is very good, and let's hope that we'll be able to complement that, and that is sustainable in the long term.
Yeah, what's not good though, Mr. Busha, is the labor unrest. I'm sure you've seen reports of that banking sector strike on Friday that's looming, as well as I saw a statement from AMCU earlier, not happy about the fact that Sibanye is going to be cutting over 5,000 jobs, saying they will spare no resource to protect the jobs of their members. That's not a good tone, and so I don't know if that indicates sustainable confidence in the country's long term.
I think there's a volatile relation between AMCU and Sibanye, in particular in the Platinum Belt. Certainly that relationship has been frosty, and not very happy one, and it gives them another ammunition. Remember, they just had a little bit of cooling off and agreements recently, and for me, the third party is going back to Marikana, which really just brings us back, what happened in 2012 at Lonimane. So let's hope that they'll be able to find each other. But when they do the retrenchment, I think if they can phase it over a long period so that it does not add to the unemployment rate, at 29%, the highest since 2008, and that does not augur well, certainly. I think the bus, we saw that, I think last week with the bus drivers also that were down in tools. We're hearing this about the banking sector. And the banking sector is under pressure because of digital banking and cryptocurrencies that are coming through, and the closure of banking halls by some of the major banking institutions in SA.
Giving quite a bit of pressure there. And then also in the first quarter bulletin by the SARB, there was an indication that South Africans are getting their lowest wages or the lowest growth in wages in several years. What does that say to the health of the consumer?
Not very good. That's why we are under pressure. I think consumers are under pressure, and employers, you are aware that they've been saying they don't want to increase wages above inflation, above 6%, and hence we've had these strikes for the past decade. I think if you look at AMCU, this is like more than a decade when they started really fighting for 12,500 wages as a minimum. So this is not really good, because then you're getting that the price of goods are increasing at a faster rate than the price of the salary increases, and that has also spilled into the retailers, because we can't shop if we don't have the money. So you find that your retailers are battling, and certainly it will put pressure on government to be able to come and assist the pressurized and consumer market.
Government under pressure, corporate South Africa under pressure, consumers under pressure. Oh boy, Mr. Busha, thank you so much for that glim outlook. I've been speaking there to Joseph Busha, who's the MD of JM Busha Investments.